think Voyager Digital could have used a longer weekend as well. They're down 99% from their all-time high. They're filing for Chapter 11 bankruptcy in the Southern District Court of New York, saying that they have about 10,000 creditors that they owe money to, and they have assets between $1 and $10 billion, as well as liabilities in the same range. It's a huge blow for the firm that's actually publicly listed up in Canada. It also trades here in the United States over the counter. They are basically the fault of Three Arrows Capital. They lended out about 60% of their order book, according to some reports, to Three Arrows Capital, which Three Arrows Capital also took out a large portion of other lending markets, notably Celsius is one people are looking at. It's not confirmed, but people are definitely looking at that. This is huge news just to see another lender go out, especially one that is publicly listed. Adam, I want to throw this one over to you, just since you've been in the space for so long. When you're looking at some of these publicly listed firms that are now having wipeouts, what does that tell you from a traditional financial standpoint? Was it wise to list these companies when they had such opaque information behind the books and behind the screen?
Uh-oh.
I think he's on
mute.
mute.
Can't hear you, Adam. Rookie.
Excuse me. I said, while I can't speak to whether it was wise to list them on the exchange or not, what I can say and what I think we're all seeing is that there was a lot of much riskier behavior going on behind the scenes as the market really got to be kind of just so large. It grew so fast that, you know, as many people were kind of looking for significant returns against their crypto, that's a much easier game to play when you're dealing with smaller sort of sizes. And as those sizes got larger, we saw these companies in hindsight taking increasingly large and in also hindsight, not very good idea risk sort of moves. And now we're kind of seeing them pay for it. One other thing that I think just came out is that they have actually been halted on the exchange in which they were listed, while the exchange is looking to see whether, now that they have formally declared bankruptcy, they're actually qualified to be listed. So the news could get worse. It's also been kind of interesting to see the price. Price didn't really move on this. And it kind of speaks to sort of some of the enthusiasm that I think has been beaten out of these markets over the last couple of weeks, where even something like this, which I would bill as a pretty momentous sort of moment for kind of the DeFi lending players, you know, like that didn't really seem to move markets at all. So that, I thought that was pretty interesting. Jen, what's your read?
Yeah, so I focused in on the marketing aspect of this story, right? So the story points to Voyager's marketing material and said that the investor deposits were protected by Federal Deposit Insurance Corporation insurance. So that's what it said in the marketing material. And while that's true, the insurance didn't cover cash converted to stable coins. And this just, I think, is a reminder to every company in this space that marketers need to understand what's going on behind the scenes. They need to understand the products, and they shouldn't be pushed to the corner and be those like crazy people who tell stories and spend a bunch of money for God knows what reason. The marketers are your first line of defense. And if they are telling an incorrect story, when things like this happen, it's just the icing on the cake when you're being scrutinized, right? And if your marketers understand what's going on, they can have plans in place for crisis situations. They can work with your PR firms. And so this story was just, I think anyone who's looking at how to do marketing well in the industry should look at what's happened here and what's happened with a lot of other firms as we head into the bear market and companies are liquidating because of Three Arrows Capital, and understand that your marketers should be involved in every single process and aspect of your business. But Will, I saw your hand go up.
Yeah, I like the point that you brought up. I'm going to riff on it a little bit more before tossing up to Wendy. When you have this intersection of crypto, which is very laissez-faire, very free, anything goes, it's okay. The casino is embraced in a lot of ways. In traditional finance, where there are rules and regulations on the books and there is the government law and you can go to jail if you mess up things, those two things don't squish well together, right? You can't just shove them together and expect them to work functionally. And so when you go on to Voyager's website and you see that they have FDIC insurance, a lot of people are saying, oh, like my crypto is backed by FDIC. That is not the case at all. FDIC does not do that. FDIC only covers dollars. They don't even cover stable coins, right? And so a lot of these people who are walking into Voyager and they're expecting to get FDIC insurance, they didn't get that, and they're not going to get that because it's only going to cover dollars that are sitting in Voyager's bank accounts on their behalf. And so it's pretty frightening if you're looking at it from an outside perspective. It's also pretty understandable if you're somebody who's a client of theirs to get caught in that trap. And then from Voyager's perspective, it's like, yes, do a better job with your marketing. Don't speak more than what you're able to do in the real sense of it. So it's troubling to see that. I do see how it's like that could happen though, right? Like this happens in the real world. People make mistakes with marketing campaigns. They don't check things out with legal, and then you get yourself into a world of hurt like we're seeing right now. Wendy, I'll toss it to you, and then I saw Adam's hand also go up.
One of the things that I want to say about this is I find it very interesting that the SEC went after a company like Ripple, but didn't really kind of do their job and try to regulate these exchanges or give some sort of gray area. I'm not blaming it on the SEC to what Voyager did with their funds behind the scenes, because all this stuff kind of just came out recently that they were working with Three Arrows Capital or whatever the deal was, and that they were practicing risky behavior. So it's really, and I'm sure that more things are going to come out, but my question is why hasn't the SEC had time to come out and to give some sort of guidelines? And it's also very interesting to me that they were a publicly listed product. You can go ahead and trade them, et cetera, and that all of this is happening now. So we know that they had legal. We know that they had different people kind of helping with them, and they really look like a professional company. I have funds there, so I've written those funds off. I know I'm not going to get them back. It's part of the game. It is what it is, unfortunately. But I think that we know that we are going to see regulation come into the crypto space very, very heavily, but we just don't know when exactly. And hopefully they do something before the next cycle, because as far as I can see from my mentions, especially like on TikTok and YouTube and all the platforms retail's tired. Retail is really, really tired. And it's just a really awful, terrible thing what's happening. And hopefully once Chapter 11 bankruptcy, once this long process is done, people can get some sort of access to some of their funds, because I know they're going to be doing different restructuring. I don't have that data in front of me right now.
So let me jump in here. So responses to both what Wendy said and to what Will said. So Wendy, with regards to the SEC, Voyager is a company that was publicly listed in Canada. So it's a Canadian company, which means that the SEC, it has some, like, depending on what type of activities they take, there are some ways for them to go after them, but it probably is a different regulator in the US. And again, it probably comes down to sort of this question about lending, right? And question about like bank-like activities. So that might even wind up being the Federal Reserve or something like that, who actually winds up having the regulatory authority there. It definitely is something where we're going to see these types of actions catalyze more attention at the regulatory level, really across the country and across the world, because it presents a pretense, which is not unreasonable to actually do so. And so again, regulators are kind of constantly looking for ways to figure out how to put the rules in place that they want in a way that they can justify. This gives them a lot of ammunition. And then one final note before we move on to the next story, Will, actually, so I thought that I understood FDI insurance this morning when I was on the senior editor's call, and had the understanding that you did. And I actually found out that I was wrong about that. And so the impression that I had going in was that crypto wasn't covered, but dollar balances would be covered if you were holding, dollar balances with Voyager. In practice, that's actually not what FDIC is going to do here. Instead, what it would do is if the bank that Voyager used had failed, then it would be covered. But Voyager losing the money is not covered by the FDIC. So even dollar holders in this circumstance are not covered by the FDIC. Yeah, and certainly to Jen's point, the way that it was portrayed certainly seems to be misleading. And again, as a reminder, I wouldn't necessarily put it on marketing. I would put it on, there's a lot of money to be made from helping people to understand the best possible version of your product. And I think that a lot of people just fall victim to that. So this is more about that than anything else. Yeah, Wendy.
I just want to chime in. If it wasn't properly displayed, isn't that a legal issue with their legal department? Wasn't that
they definitely have, they definitely have legal issues in their future, I think. Like the results of this are going to be playing out in court for a while.
But my point is why, because they have to have a legal team. All these exchanges, they have to have a legal team, especially if you want to operate in the United States. So my question is, why didn't legal advise marketing on a better way to express this to consumers through the terms of services?
Great question, Wendy.
Hindsight is 2020.
We see that happen in the traditional world, but I think in the crypto world, sometimes we don't follow the same processes that.
I don't know. I got to disagree there, because a lot of these exchanges are I can't even say heavily regulated anymore, but that's what it seemed like. And you have because I've got a bunch of different crypto firms on retainer, or legal crypto firms on retainer, because I want to make sure what I'm doing is up to code, like I'm doing everything properly, because I talk about crypto all the time. But I just don't understand why what happened, what the miscommunication was between legal and marketing, because generally they work hand in hand to make sure what is being displayed to the public is displayed accurately and concisely.
So I'll just say that what the math winds up making sense for there is partly about what the lawyers think. But if you try and have lawyers make these decisions, then they basically won't let you do anything. So it really comes down to kind of like a business decision where it's a question of how much are you going to listen to the lawyers, how much are you going to listen to your marketers, and where does kind of the balance fall in amongst all of that. And clearly, I think we're seeing that they made decisions that bias more towards the risky side. And I think that we're going to see that play out.